Hi, it's Russell Quirk from Emoov.co.uk, broadcasting from Emoov Towers. What I want to talk about today is the question of young people getting onto the property ladder, a question that I'm asked more and more as first-time buyers are finding it harder and harder to own a home, given how high house prices rise, particularly in some parts of the country like London and the southeast. So just want to talk about what young people can do in order to help them buy that home that they yearn for, and given what an aspirational home owning nation we are. A bunch of government schemes out there for first-time buyers and others actually Help to Buy, for instance, which helps first-time buyers get on the ladder with a 5% deposit, which they kind of subsidise. Help to Buy equity loans that provide that the government lends first-time buyer and current homeowners money to buy a new build home. There's Right to Buy. Tenants who qualify can buy their current home from their local council. Must be a council or a housing association though, at a discounted rate. And then of course there's shared ownership, where you can buy a share of a home and rent the remainder, again via a housing association. There are starter home schemes. A number of new build homes are available to first time buyers under 40 years old with a 20% discounted rate. There are estimates on the actual monetary amount also needed for a deposit for a house. Now typically you'll need 5% minimum really of the cost of the property for a deposit, but the actual amount of course varies. So a typical first time buyer home at, let's say, £150,000, you're going to have to come up with about £7,500 just to get into a mortgage, but that isn't going to give you much in terms of availability of mortgage products. So you're probably going to need 10%, so typically about £15,000 on a £150,000 home just to get into the decent rates and the decent deals. Make sure that obviously once you've got the property, you've got enough to cover not just the monthly mortgage, but also there's all the ancillary costs at the beginning, like stamp duty and legal fees and so on. So what is the best way to save towards that deposit? Now this sounds like a bit of intelligence insulting on my part, pretty personal stuff, but you must make sure that you have a monthly budget and that you can stick to it. I think that's pretty crucial, and in doing so you prioritise the purchase of the home and other places where you can save. An example will be to cook more meals at home, to prepare lunches to avoid expensive holidays, sell your car, make your own coffee. Cutting back on hobbies, trips, nights out, etc. will make a big difference to how much you can save. But be realistic. Make sure that you also pay off credit card debts, bank loans and so on first. It's counterproductive to save your money when you're paying interest to somebody else, surely. Bonuses, pay increases, stick them away too. Don't change your lifestyle when you get a bit of extra cash. Instead, put it straight into your property savings, particularly maybe a Help to Buy ISA. So there you go. There's a few seconds of quick advice on how you might more easily get onto the property ladder. And given that once you do, proportionally it can actually be cheaper on a monthly basis than renting, and of course the value of the property, maybe not all the time, but certainly in the medium to the long term, will go up. So safe as houses, as they say.